Hello and welcome to our market alert video for today, which is January 19, 2024. I hope this video finds you healthy, wealthy, and wise. I am Ken Moraif. I'm the founder and CEO of Retirement Planners of America, and thank you for watching. So this video, I want to talk about where we go from here. We've gotten some good data this week on consumer confidence, and it looks like the consumer is confident despite the fact that it's now $20 to buy a Big Mac or something like that. So the market is going up, and it went down earlier for the first 2 weeks of this year. And so I want to talk about what the dynamic that we see is happening and where that takes us into the future. So last year, towards the end of the year, in the fourth quarter, we saw a tremendous run up in the market. Why did that happen? Well, in our view, there was a great deal of confidence in the market that the Federal Reserve was going to be lowering interest rates in March, that inflation was under control, mission accomplished, and all would be blue skies and sunshine going forward. Well, as it turns out, that's not the case. The economy seems to be a little stronger than people thought. Jobs are strong, confidence is strong. It means inflation most likely is going to be here longer than those people anticipated. So those people thinking, okay, we made our profit, guess what? We're going to sell and take our money off the table. But now we're having what we're calling the great rotation, which is now the people who are looking into the rest of this year and are saying, back later on in August, the Fed will be lowering interest rates. Profits will come with that, lower cost of money, more purchasing power for consumers, more profits, drive stock prices up. We want to buy now. So the rotation is out of the people that made a lot of profit last year and into the people who are now investing for the rest of this year. That's how we see it. So we think this year should be a very good year for stocks. We continue to believe that. Now on the bond side, for those of you who believe in being diversified, we think that this year could be a very, very strong year for bonds. Why? Because last year and the year before and the year before that, for about 3 years, we went through the worst bear market in bonds in recorded history, according to Bloomberg. So if something has a terrible bear market, meaning it went down dramatically, then most likely is that when it rebounds, it's going to go up dramatically as well. And so that's why we think this year could be a very strong year for bonds. So on both sides of the equation, we've seen periods where both of them went down at the same time. This year, we think we'll see both of them going up at the same time. So it'll be an unusual year this year as well, but in a good way. Now, having said all of that, we do not have a crystal ball, okay? So despite our optimism and despite the fact that we are fully invested right now, that does not mean that we plan for the best and hope the worst doesn't happen. In fact, it's the contrary. We plan for the worst and we hope that the best will happen. So what I just gave you is what we consider to be a realistically but a good scenario. We plan for the worst, which means we always believe you should have a strategy to get yourself out of harm's way, your investments, if bad things are coming. Our strategy is called Invest and Protect. It told us to sell in November of 2007 before the great crisis of 2008. It told us to sell literally the day before the pandemic was announced in 2020. And in 2022, it said to sell in April. And we know what happened after those 2 times as well. So we want to protect from the downside, but invest accordingly when we think things are going to go well. Now, if you are over 50, if you are retired or retiring soon, then we believe you should have an exit strategy, a save your retirement plan strategy. And so go to our website and see if there's a fit for you with what we do. Our goal is to create SQIPers. And a SQIPer is the acronym for Second Childhood Without Parental Supervision. So we want our clients, when they retire, we call them SQIPers. That's our name for them. And we want them to go out and start squippering their little tails off. We want the whole country to be covered in SQIPers. And we want to help you to achieve that as well. So we can't help you if you don't let us help you. So thank you for watching this video, and good luck out there. We'll talk soon.